Good morning, everyone. Hello, ladies and gentlemen, and welcome to this webinar today. It's Tuesday, 27th of December. I'd like to, from myself and on behalf of Admirals, the whole family here, I would like to wish to everyone Merry Christmas. For those who are celebrating Christmas now, for those who don't celebrate and you just had days off, I hope you get some good rest, right? How's everyone doing today? You can use the chat box below and just let me know. Obviously, yesterday, only few markets, they were just moving a bit weird. I hope that you didn't got very actively involved in some cases. Hello, guys. Cherry, Tyler, Rumen. Also, today, tomorrow, we do expect volatility to be very, very, very low. Usually, the big trading firms are not active during this week. So mostly retail stuff are going to move the market. Anyway, we're going to just see them in a while. Guys, just to make sure that you're aware about the risk warning, as you can see it on the screen, and also about the podcast we do every Monday. Yesterday, obviously, I didn't record any podcast because the purpose of the podcast are to put the major news events together for you so you understand how to look trading from also the news perspective. However, this week we have only one major news event coming and it will happen on Saturday. So for this week, there are no major announcement from the banks that they can affect movements in trading. However, the only thing can affect it's the low liquidity as well. So low volatility, low liquidity, especially low liquidity can increase the spreads. So please be careful when you are trading these markets for this week at least. Let's share and go to the website. Guys, for those who are new here, I would like to make sure that you know we have this Instagram channel. A lot of things are going on here. We post so many times a day, 3 or stories, posts. So please make sure you engage yourself with the page, at least enable your notification buttons, and when something is uploaded, you're gonna receive it. Okay, and the next one, we have the Telegram channel, of course. Now you are able to use the chat box on the Telegram and leave comments or open up any conversation. I keep an eye on the Telegram channel as well, although it's not what I do on a daily basis. But when I see that someone comments, and I understand that it's coming from you guys here based on the questions or the names, I'm more than happy to also answer them. So here is the link. And the last one, we do have the YouTube channel. That's where I would like everyone to be engaged because it's very, very educative, this one here. Here at the Trading Spotlight, you can find all the recording webinars we do and also the recording lives if you go to videos. But please, I will appreciate if you guys not only subscribe, but also like the videos, especially this live trading we do here. You can like them. It also gives me a good sense of understanding about how you find the videos. For those who participate through the Zoom, especially, guys, just to let you know, Every time after we finish the sessions, you just redirect. It's just pop up a thing in front of your screen, and it just asks you for a feedback. All feedbacks are anonymous unless you want to put your name. That's absolutely fine, but all feedbacks are anonymous, and you can say what you would like to see more, or what would you like, where you want to be improved, or whatever it's related to this live session we do here. I see many people, they join us. Merry Christmas, everyone. Merry Christmas. Good morning, Rahel, Kyla, and everyone else. Good morning, Merry Christmas, Job. Please explain the Fibonacci, how to draw easily. Okay, we will do that. So, guys, I would like to take advantage of these sessions. Anyhow, the markets are very low in liquidity and volatility this time. So if you want, I can go through to some important aspects of trading. If you would like, I will use the charts to give you some more insight of trading, something that I don't have time to do it during when the markets are very active, because we do extensive intensive analysis. Just to let you know, this week there are no major news events, so we can just be very fast with these also topics here. Anyhow, for today's top headlines, what do we have? China to open borders as COVID-19 cases rises. Russia's gas production, exports shrink under sanction pressure. Ukrainian drone attacked on Russian airbase, kills 3, Moscow says. Suspect in Paris Kurdish center killing faces hate crime charges. TikTok security dilemma revives push for US control, and rising power prices in Europe are making EV ownership more expensive. Let's go to the chart. Let's find the MT5. Oh, why I don't see my MT5 here? Here it is. All right. Theo, when do markets start trading full stream next year? Look, after the first week of the year, usually the first week of January, it's always a bit weird due to major news events coming out, reports from last year, and all this stuff. So we give the first week of the year. So from the 7th of January, technically we start going back to the normal, as we say, in terms of liquidity and in terms also of volatility. Translation results. Silver starting to look down. Leah, we're going to have a look at the silver. Guys, just very quickly to go through the few markets, and then I will give you some things insight about the markets. So US dollar, let's go to the weekly chart. We see this move to the upside. That was a big trend. With higher highs and higher lows. At some point, it came to retrace all the way back to this 2020 support. Another time we saw the market supporting, it was here. Now we found 2 weeks support here, one candle here, one candle there. This is also in somewhere in 55% fib retracement. That's the 50, that's the 61.8. So it's somewhere in the middle. Anyway, we say that in this area, usually there are some activity going on. So what someone expect, obviously, if price for 2 weeks, it's just hovering around, maybe we can see a move in either way. However, considering the fact that we are in a we are bearish in this move, we see the price move downwards, we just sell the US dollar and we don't buy the US dollar. Okay, that's exactly what technical analysis is to save ourselves from this. What do I think is happening here? You don't need to think what is happening here. You can just read what is happening here, and you can only forecast what can happen in the near future. And that's really important for trading, guys, because many traders I see, especially when I do the coaching one-to-one, and I see the traders, and I say, okay, why did you get in this position? And they start explaining, I thought this is going to be, and I think, no, when you do technical analysis, that's the best thing. You don't need to think. It's there. It's either there or it's not. So what I would like to make an introduction to is to the primary trend, intermediate trend, and near-term trend. As per the technical analysis theory and extensively from Dow Jones theory, we have the primary trend, and that's how I analyze my charts, guys. That's how I do the analysis in front of you. I have the primary trend, and I know that it's a trend that I see the prices, what happened in the last 9 months, at least 9 months and above. So 9 months to a year, I just see what's happening in the market. Then in the intermediate trend, it's about 6 months, but I want to be as close as possible to 3 months. So I take this more in consideration, around 3 months or 180 days. And then the near-term trend, it's about 4 weeks, about 1 month. So about 4 candles here. So 4 weeks or 1 month, it's the near-term trend. Now, the primary, as we know that markets, they move in waves, and this wave here, if this is a primary trend, let me delete everything here. If this is a primary trend, it means if we go a time frame lower, we can see this trend here to be like with more waves. I'm sure everyone understands this so far, right? Or if you don't understand, just learn it today. So every trend, every wave on a lower time frame, it appears to be with more corrections and retracements. Okay, and if this is a primary trend, we want to trade ideally in the direction of this primary trend. Now, what's happening here and why from this point here, I make it so clear to you guys, and we were selling the dollar up to this point here where we had this, actually up to this point here where we had the 50%. Why I was very keen and bearish from this point here up to this point there, because here I saw that we have a primary trend that was, if you measure it, if you see the times, it's about 8-9 months, and then I saw that we broke below, and from here to there we were about 3-4 months. So primary trend was up. it just broke. We had this trend line here. It just broke a strong trend line, and it created this lower low here. So it confirms that buyers are not in control. So primary trend just broke from uptrend. We have the intermediate trend that it turned bearish, and of course the near-term trend that it turned bearish. And it was a high probability that we're going to see a move at least to the next fib area or to the next support. Okay, guys, that's why I said the room of opportunity was from here to there. Now, when we broke below, we ideally wanted the market to move to the next fib area, but a trader who just zoom out on the chart can see that this is a strong area of interaction between buyers and sellers. So if this is a strong area, we expect it when the price comes back to this area, and in this incident, it came from resistance. So this area can act as support. And we saw the price for 2 weeks here, it's just rejecting this support. Now, either it's going to break or it's going to bounce, right? However, how to know in advance what it's going to happen, we can just go to lower time frame and we can see pattern. And this pattern here, how it's developing now, it gives us a clue of maybe it's a kind of descending triangle. Descending triangle in a downtrend most of the times has bearish implication, and if it's break, then we see, as we explain in webinars, how do we measure, how do we trade this pattern. Okay, so I'm not going to go through how to. There is on that recording webinar I've done about the patterns on the trading spotlights on YouTube channel, guys, and please make sure you watch it. Then, so that's how I read the markets before I decide where I'm going to trade. And to go back to the same example, this trading happened when we were here. We were here and we said that, okay, we're going to start selling the dollar at least up to this point here. That was the 50%. So we had this room of opportunity, and that keep us busy selling the dollar for about a couple of weeks, for intraday, for swing trading, for end of day trading, or whatever. So that was the clear picture for the dollar. After that, there were the cross pairs they gave opportunity. It's not all the time we have to trade the dollar. That's why we have plethora of securities to trade. So it was someone asked me, how do we draw the fib retracement? How do we use the fib retracement? Let's find the question. Fibonacci, how to draw easily? Well, to draw Fibonacci, you need to know where the market is trending, in which direction it's going. So if we take this example here, you can take, that's the Fib tool, draw Fibonacci retracement. You click on that. If you are in an uptrend, you want to start from the low to the high. So from the low here, up from the low to the highest point after you see the reversal. So why to do that? Because as the name says, Fibonacci retracement is measuring the retracement. Where can we find retracement? And that's another thing that traders they get, unfortunately, they missed on that. We find retracements only in trends. We don't find retracements in sideways moves. What probability is that? The retracements. When we talked about retracements and the use of Fibonacci, we need to have a trend. So we know how much it's going to retrace, ladies and gentlemen. And in this occasion, because we are in an uptrend, we draw from the low to the high. We have this impulse move, and we want to find possible entries where price maybe stop when it's going to visit the area. And as you can see here, the FIB retracement 50% match perfectly with this support. Can you see that? The 61.8% retracement match almost perfectly with also this strong support we draw in advance in the market. You see how technical analysis, it's so accurate, and it gives us the exact picture in the market. Okay, so if we are in a downtrend, let's say like this one here, let's change the pair, let's go to the euro US dollar. If we are in a downtrend, let's say from here to there, I want to take this move here, and I want to measure the possible retracement. So what do? I click on the FIB. I start from the high to the lowest point. I extend it a bit on the side so I can see the lines. And what do I see? That only the 61.8% FIB retracement matches very, very nicely with the previous lower points in the market, or swing points, or support. So this support now can act as a strong resistance, and it validates more its strength because it matches with the 61.8% FIB retracement. So every time I use the FIB tool, I want to have at least 2 clusters. I don't just trade based on the FIB tool. No, if I trade based on something, I will only trade based on support and resistance. But if I'm going to use any tool, dynamic tool that changes its position with the price changing, then I would want to use at least 2 points before I enter. Like this one here, why I enter on the 61.8 and not on the 50? Because on the 61.8 simply has also this strong broken support. So it can act as resistance. Among the 61.8, it gives more strength to this area, and it makes it higher probability trade. Then, good morning, sir. Sometimes divergence comes with hidden divergence. Is that a good setup for a hidden divergence trade? Absolutely, definitely. But please make sure, one more time, understand that divergent, hidden divergence, also they don't work all the time, and especially when you are trying, when you are in, let me show you this pair, Aussie Canadian, no, that was the euro against the Canadian dollar. If you plot some RSI, some here, and you go especially on the 4-hour chart here, or even MACD, you're going to see divergence on the divergence on the divergence, but the price is just making higher highs. All right. I will give you an insight. How do I use divergence? First, I will use like any other trading setup. How do we trade? We trade based on at least 2 factors. Or if we're going to trade a reversal like this one here, we must stick to strong support or resistance in the market. If we go to this example here, guys, we can see that here we have a strong resistance. So if someone wants to trade this point here with reversal, it's with divergence, it's better to trade them when the price comes at a level, a strong level of resistance like this one here. So if you plot your oscillator and you can find divergence, if this divergence occurs, let's say you want to trade bearish divergence or negative divergence, the price made an equal high here. If your oscillator, it makes a lower high with the price making this equal high, from this level of resistance, that's a high probability to trade divergence. But if the price is not at a strong level of resistance, and let's say the price was only here, and you find divergence as the price moves with the oscillator, and you find divergence here with the price making this move without being in a level of resistance, then it's a very low probability trade to take. I hope it makes sense. Guys, any other question? I would like you to take advantage of these sessions this week and ask as many questions you need about the way you trade, because I'm telling you how do I trade, and I would like to help you as much as possible. So please take this time to ask me anything you need. So if we take, for example, the pound against the euro against the pound, and we want to know in which direction we will trade, usually what do? I go on the weekly chart, because it's easier to find primary, intermediate, and near-term trend. On the weekly charts here, the primary trend, it's a trend that is been valid for, let's say, 9 months and above. So that's 21, 22. So the 9 months of data to 1 year, it was when the price was at this point. Now the price is at this point. So which one is the best setup levels for Fib retracement in the currency markets is 50% and 61.8%, ideally 61.8%. On the indices and on the stock markets, we see many times the 38.2% works well, but that's low probability. When we trade currencies, just in my opinion, we stick more to 50 and 61.8. So primary trend for this market is upwards, right? Because we see that the price was here, now it's there. So the price moved from low to high. So primary trend is up. Intermediate trend then, it's somewhere here. Let's say August 2022 until here. So intermediate trend, it's also upwards. It's also an bullish. And then we want, ideally, we identify that primary trend is up, intermediate trend is up. So we would like to take advantage and buy this. What do? We wait for the near-term trend to come to a level of support, resistance, and that's where now we mapped our chart. I'm sure many people, when they see this, how to call it now, this, it's not even a bearish engulfing, this long upper tail candle, they start selling, and when they came here, they were selling. When it came here, they were selling. But why did they do that? Because they don't know how to really read the market from the market perspective. And in the markets, we have those three trends: primary, intermediate, and near term. I repeat again, primary trend, it's 9 months and above. It's not exactly 9 months or 8.5 months. It's somewhere around 9 months. Then we have the intermediate trend, which is about 6 months, but ideally we want to see what's happening in the near 3 months, okay, if that makes more sense. And then the near-term trend is about 4 weeks. We want to see what's happening in this 1 month period. And we use the near-term trend to enter in the direction of the primary or in the intermediate trend. There are points, guys, there are some points that primary trend is sideways, intermediate trend it's sideways, and near-term trend it's just uptrend. In these markets, really, it saves us by doing this analysis not to get involved. Okay, so this is the first thing we do when we do analysis in the market. For those who are doing who are trading on the 5-minute chart, 15-minute chart, then your primary trend, if you do your analysis on the 4-hour chart, your primary trend is about 2 weeks' time. And write this down. If you are very intraday trader, scalper, and you are using the 4-hour chart for analysis, then primary trend, it's about 2 weeks worth of data. Then your intermediate trend, it's about 1 week of data. And your near-term trend, it's about a couple of days. If you are trading on the 5-minute chart, yeah, it's a couple of days. That's more than enough. Okay. Then what can we do in this market? Because many people, they just see this as sideways, but we extracted a very useful information. So at this point here, when we identified the strong support and the market was rejecting it, we could either buy blindly on the support with a stop loss relatively below these points, or we could just wait for a price action to occur, and we can just understand that it has higher probability to push to the upside. And that's what it does. It did from this point here, from this point here as well. So there were a couple of opportunities here with the euro against the pound. So that's the first thing I would like you guys to learn: the primary, the intermediate, and the near-term trend. All right. Just play around a little bit with your charts if you have time today, tomorrow, and just make a comparison to some trades you enter. That's a how to say, not a homework, but that's an exercise for you. So I would like to ask everyone here, if you have the time, I would like you to do it, and you give me your observations tomorrow. Just go back to some charts, some trades you took them. And with this new method you understand today, just use primary, intermediate, and near-term trend analysis. That's all. Don't try to go further, okay? Just to see the direction, in which direction you took that trade, based on the primary, intermediate, and near-term trend. After you get the direction, see where, if you will take the same trade that you had already traded. Maybe you're going to see that primary trend was sideways, everything was mixed up. So in this type of markets, we just avoid them, right? Just please make this and let me know tomorrow if you're going to be here. Tomorrow, I'm going to continue this to the next. What do we do next after we identify them. Then how do we trade them? Because that's what we want to do, to trade them, right? So I will leave you with this for now. If you find value in this webinar, please make sure you like this on YouTube. Have a great day ahead, ladies and gentlemen. Be safe with trading. If you ask me if I'm trading intraday or all this stuff these days, personally, I don't, unless it's on a daily opportunity. That's there I'm going to trade. But usually I don't like to trade this uncertainty. So if you are trading, nothing wrong with that. Just keep your risk a little bit strict. Be strict with your risk. And I'll see you again tomorrow to continue this where we're going to get for execution. Okay. Thank you so much for your effort. Please make sure you do the exercise because we have to talk about that exercise tomorrow. Have a great day ahead.